Hey traders, it is Sunday evening, June 14th. Taking a look at the market. Looks like the S&P futures are down about 37 points overnight. Let's put that into context and see how the market might be shaping up for Monday. Going to put some major moving averages over here. 200-day, 100-day. See where they come into play. Got the 200-day that we tested twice now. So we tested it, held, tested it Friday, held. Looks like we're going to be testing it again. Let's go into that 5-minute chart and let's take a look at where that might put us. So if we're down 37 points, let's make it around 40 points. You can see that comes in right around that 300 level. So once again, tomorrow morning, we're going to be testing that support. So we've got 1, 2, 3. This is something I call a marginal new low, meaning that it made a new low, but it was just a little bit below the prior one. So for all intents and purposes, call it basically another test of this same support level. 1, 2, 3. Didn't quite get down there. 4, 5. As we start bumping along the support level more and more, it confirms it. So this is going to be quadruple witching. That means the futures and options, everything expires this week. That adds a little bit of volatility to the mix. I believe that we're going to be testing the downside Monday morning, testing the support level one more time. If it holds, I think that we might have a decent chance for a bounce. If it does not hold, then we are definitely going to test that 395 level on the SPY. That was horizontal support once, twice. Now we get a breakout, so it'll become support. And now you can see how that 100-day moving average is also coming into play at 395. We've had a spike in coronavirus cases, not anything devastating. The country is not going to shut down, but that's what sparked some of the selling. At least that's what grabbed the headlines last week. If you take a look at the price action, I've been noting this. We had this upward sloping channel right here, and we broke through the upper uptrend line of that trading channel, which usually signifies a buying climax. We had extremely light volume. Look at how light the volume was there on that rally. That is a low level of conviction. Bullish speculation hadn't reached levels in 20 years that were as high as we saw last week. You heard me say that I believe a pullback is coming, and we are in cash, and now we're waiting to deploy that cash. There's an old saying that I like to use. It's called the second mouse gets the cheese. We don't need to be the first mouse here. Let's make sure that support has been established. Let's test it a number of times. Once it's been tested, I feel that we're going to be able to recover, at least bounce for another month or so before we might test the downside again. Or maybe we just go sideways. So I think that a good trading opportunity is setting up this week, and I am favoring selling out of the money bullish put spreads on strong stocks. So we've got lots of factors playing in our favor on the upside. We have really good jobs numbers that came out last month from both the unemployment report and from the ADP report. We have ISM manufacturing that was better than expected. ISM services was excellent. We had good PMIs from China. And the government has said we're not going to shut down no matter how much the coronavirus spreads again. States may use a little bit of their power to prolong the phase in, but I think most realize that they need to get the economy back on its feet. They need to stress social distancing, wearing face masks, all of that type of thing. So I believe that we're going to have a nice little opportunity to sell some bullish put spreads that expire sometime in July, and that's when earnings season will start back up. That's when I think we could run into some problems. So we get a little bit of a bounce, maybe a lower high double top type of situation. Earnings in July really, really soft because that's Q2. Every CEO said that Q2 is going to be much worse than Q1. And I think that the market has built in really high expectations. So maybe get a little bit of a pullback in August, September. That's how I see things playing out. But I think we've got an opportunity to sell some out of the money bullish premium. This first wave of selling is usually not the one. We get a little bit of bounce for about 2 or 3 weeks. That'll give us the window that we need to sell some out of the money bullish put spreads. Now, if we take a look at what bullish put spreads we might possibly want to sell. I can go through and show you a bunch of stocks in these lists right here, but in general, let's take a look at the QQQ. You can see how the QQQ made a new all-time high right in there last week. And it was led by the big stocks, Apple, Google, Facebook, Amazon, all the really big mega cap tech names. That's where you want to be. That's where you want to be selling your out of money bullish put spreads. You don't want to be in those laggard sectors. Travel and entertainment, energy, I think you should avoid those for right now. But I think if you stick with tech when you're selling your out of the money bullish put spreads, you'll be in great shape. I don't like the setup overnight tonight. Now, some of you might be a little bit disappointed that I'm not going to give you a great trade for Monday morning. I don't have one. I want to see if that support holds, and I'm going to be watching very, very closely as we get back down to this support level. Okay, we've tested it a couple of times. The more times we test it right at that 200-day moving average, the better I'll feel. We may even poke down to that 100-day moving average, and I'd love to see what happens on the SPY when we get down to this 295 level. I suspect it won't be there very long, and that buying off of it would tell me that the market's probably ready to float a little bit higher. Typically, into an earnings season, the market is priced for optimism. Everybody's excited, especially ahead of the mega cap tech earnings. So I think we're going to see the same thing this time around. So if I look down the list here, I'm just going to pick one out because I have actually looked at it for the last few days. SHOP. I like that. The reason that I like it is it's got 1, 2, 3, 4 tests of this horizontal support level at 700. You can see it's a long ways off of its major moving averages, so this has been a very powerful stock. We're going to put up that 1OSI indicator. You can see it's right at zero. This is what it did this week. It had a very good week. It did not sell off with the market, so that tells me that buyers are lined up. Now, if I were looking for a bullish put spread on this, I would want to distance myself from the action. You can see the stock is at about $740. I don't know what the market's going to do this week. I don't know if it's going to provide us with a better entry point down around the 295 level. This is a stock I'm going to be watching, and I'm going to be trying to sell an out of the money bullish put spread on it. And I'm probably going to be looking somewhere on that June 26th expiration date. And I'm going to go down to the 650 puts. So if I click on the 650 puts, click the ask on the 640 puts. So I'm selling the 650s, buying the 640s. We have $10 between these strike prices. I would need to get a $2 credit to do that trade. And you can see that the spread is 30 cents bid, offered at 440. Yes, $2 is somewhere in the middle of that. May be possible, especially on a market pullback tomorrow. I would wait to make sure that that pullback tomorrow on the S&P 500 that it holds. And so specifically what I'll be looking for, hopefully we'll get this type of pattern, is we get a gap down on the open and it comes right into this level. We tested a couple of times and I get that 1OP indicator troughing deep and crossing to the upside. If I get that type of pattern, then I'm going to feel very, very confident that the market tested that level again and that it's getting ready to bounce. I'm going to put that 1OP indicator up so you can get a feel for what that looks like. This is all I use to day trade. So what I'd be looking for is a gap down open on the market and a deep trough like that early in the day. And I can go back and see if I've got any other instance of that happening, just so that you can see what I'll be watching for. Could be just like this. Okay, gap down, deep trough. There you get your deep trough. Now you got the indicator going up, up, up. But in this case, you can see how the SPY did not rally with this happening. That told me we were going down. I would be looking for a cross like that and a breakout through the high of the day on that gap down, and for it to continue higher with exactly this pattern. Then I know I'll be trading from the long side, and that'll also give me the confidence to sell out of the money bullish put spreads, because I will know that in the last 2 days that 300 level on the SPY has been tested a multiple number of times. So Don't really have a great trade for you overnight because I don't know what the market's going to do. Market first, market first, market first. We're in cash. We're waiting to deploy. Let's make sure that this support is holding and that there's not more downside to come. So that's it for tonight, Sunday. Look for my video. I'll try and post it as early as possible Monday, and we'll take a look and see how things are shaping up. Thanks. See you then.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.